Welcome back to Next Gen Investing. It's now time for FOMO, and joining us, as always, to discuss more on some of the, unfortunately, DeepSeek demise of these massive tech players is Caroline Woods, senior markets correspondent for the network. So, Caroline, we were focused on Broadcom, but really, it's a lot of these semiconductor names that have seen any degree of upside over the last several months. I mean, it's Nvidia, it's Marvell, it's ANET, it's all these names that have been such strong beneficiaries of the AI hype, or what was expected to be that. So walk us through the story.
Hey there, Jenny. Yes, a new name, a new word has entered the chat, and that's DeepSeek. I feel like I've said it so many times today and wasn't in my vocabulary until this weekend. So yes, this Chinese startup and its large language model called R1 certainly wreaking havoc on the overall market, especially the tech sector, and really rattling some tech stocks more than others, with the chip space really getting hit hard. You mentioned a few of the names, but Broadcom, one of the worst performers today, down about 20%. Marvell down 19%. Nvidia, the topic of a lot of conversation among analysts, down more than 17% right now. But basically on my entire AI watch list, the only two names that are higher are Texas Instruments and Adobe right now. So it's certainly taking a hit. Now, DeepSeek claimed to have trained its models on older Nvidia chips for just $5.6 million. So that less than $6 million price tag compares to $100 million plus that it cost to train the latest model behind OpenAI's ChatGPT. Now, some on X, including Elon Musk, are speculating about if they're actually using old Nvidia chips rather than new ones, and others are questioning if that $5.6 million price tag is actually accurate. So there's still a lot of uncertainty around DeepSeek right now, but there's clearly some concern about what impact it could have. We don't necessarily know if chip demand is actually at risk, but investors seem to be a little bit concerned, at least based on what we're seeing in terms of the overall sell-off. I do think that it's important to take a look at what the analyst community is saying as well. And they're much more bullish. They're sticking with their bullish stance, especially as it relates to some of the bigger names. Nvidia is the name that's called out the most, but Dan Ives over at Wedbush was busy tweeting on X this morning saying the bears are basically trying to scare investors that this is a black swan moment. It's actually the opposite. If inference training accelerates, it speeds up the AI revolution, he says, and that's bullish for hyperscalers, Nvidia, and use cases, saying DeepSeek impressive LLM, it ends there. He also points out that, according to, in his opinion, that no global U.S. Global 2000 is going to use a Chinese startup to launch their AI infrastructure and use cases. So it says at the end of the day, there's only one chip company in the world launching autonomous, robotics, and broader AI use cases, and that's Nvidia. So saying that this is a golden buying opportunity, kept his outperform rating and $175 price target. Meanwhile, TD Cowen, in a note titled "Less is More, DeepSeek Moment, Not the Negative Market is Assuming," the analyst there says, "We understand the concerns, but this could be the entry point in AI stocks, Nvidia in particular, many have been waiting for." And their reasoning is that they see little reason that this specific model should be seen as a negative for hardware spending in either the near or the long term, saying let's not forget that just last week entities that have been at the forefront of AI advancement announced Stargate and Meta once again raised capex to power their AI ambitions. So just in terms of some other analyst commentary that we've been seeing, Citi questions whether DeepSeek is actually using those old Nvidia chips and not the more advanced one. So they kept a buy rating on Nvidia and $175 price target. They said that the recent AI spending announcements like Stargate are a nod for the need for advanced chips. And Cantor Fitzgerald actually said DeepSeek is actually very bullish for chip names like Nvidia, saying despite great angst around the impact for compute demand and fears of peak spending on GPUs, they believe that advances mean Gen AI is closer, and that work will continue on pre-training, post-training, time-based inference reasoning, and future investments in large-scale clusters that will accelerate, and that will only be bullish for AI. So they kept a buy rating and said buy potential weakness from some of the big names like Nvidia. So certainly seeing that weakness today, not seeing a whole lot of dip buying, at least at this point, for some of the names that we've mentioned. Nvidia down about almost 17% right now. Broadcom down about 20%. So a tough day in the chip space, but it's certainly an interesting, new development in the AI story that I'm sure we'll be continuing to watch and continuing to talk about.
What's the feeling there on the floor? Is there uneasiness amongst traders? I mean, I can hear all these analysts spin this as a good thing, but when you're looking at some of the biggest companies in the world down 15, 16, 17%, I have to imagine there's some money being lost today.
I'll tell you, the true sentiment on the floor is Shake Shack was here ringing the opening bell, and they were giving free burgers and fries outside. So it's a hungry and upbeat sentiment because of the free burgers. But in all seriousness, it really depends on the traders that you speak to. Several are still very bullish on the overall big tech story. So, it can very much be looked at as a buying opportunity. Some still say, too expensive for me to actually get in at these levels, so would welcome an even further pullback. So it's not like all of a sudden it's this huge thing that all of a sudden is taking the floor by storm. I just think it's really an important reminder that there are still unknowns out there that can rattle the market, and we're seeing that play out today. And you don't really think about it until it happens, right? So, but if you take a look to bring it back to the analyst community, I mean, we haven't seen any re-ratings or any even price target adjustments based on some of these big names. So still 90% of analysts rate Nvidia as a buy. The median price target implies almost 50% upside now because of today's sell-off at $175 a share. Broadcom 90% buy, a median price target 250, so 25% upside from current levels. So Wall Street certainly, looking at this as a buying opportunity. I think it just depends on, what will you can't time the market, but how much lower could they go? We'll have to wait and see.
Yeah, and I mean, seemingly, like, Nvidia still has a over $3 trillion market cap. We have erased, now like $300 billion on the session, but all things considered, it's still such a massive company that I feel like you have to kind of zoom out and say, like, this kind of thing does happen. It's not completely unprecedented, not to say that a move as brutal as today has been is not felt by those that are losing, but I just feel like sometimes with these valuations, maybe we were due for a bit of a pullback there. But I appreciate the breakdown as always, and appreciate the insight, Caroline Woods, Senior Markets Correspondent for the network.